the market overall, triple Qs, sitting sideways here. We saw that phantom print come through last week for 313. And I do have a short position open on the market. I have the S&P 500 puts. And I currently, which we're actually going to save that because that's a premium trade for the premium members in the Discord. But I do have an S&P 500 puts. So the reason that I have those, and we'll talk about that before we get into triple Qs, but the reason that I did that is because even though we're still trending up, and this is something you have to understand, you have to respect the trend. I said this and it was like super nerdy, but like the trend overall is like the ocean and a current. It can be your best friend if you're going with the current. The current can take you places. They can make it so much easier for you to get around. But if you have to go against the current or you try to go against the current, it'll fucking drown you. Like physically, it will drown you and kill you. Metaphorically in the market, it will drown your account and kill you if you try to go against the trend. Because the truth of the matter is, what should happen doesn't happen, and anything can fucking happen in the market. So the S&P 500, we're still moving up in the trend for the past month. Yes, overall, we're kind of sitting sideways, but this trend in the past month is still up. So I have to respect that. But the thing that I like that's bearish is we finally pushed and held below this 5 SMA here, and we're finally consolidating. So we're consolidating now under this 5 SMA. And so what I'm looking for here is we're short here, and we're looking for this potential rejection and drop down to this phantom print. That'd be great if we could fill the gap down to 395. I'm not even worried about that right now. What I'm really looking for is that phantom print at like, I think it was initially, we had one at 403, and then I think on QQQ it was like 313 or something. So setting this trade up here, we'd have to set a stop loss very tightly at like 414 minimum, which is a 4-to-1 RVR. Now, the reason we have to set this stop loss so tight is one, because we have to have a good RVR, which we do. And number two is because we have to respect the trend. If we're trading with the trend, I am a lot more patient when it comes to my stop losses. If we're trading against the trend, I am impatient as fuck when it comes to stop losses because we need to get out as soon as possible if this thing wants to make another move up to 418 or 420. Same situation with triple Qs. Triple Qs is not looking too hot on the daily, came down and actually, I would say, knocked out this phantom print that we have here today. And then from there, completely ran back up and pushed up to 315.73. So looking at QQQ, I think that we are going to probably try to bounce one more time here and move up to 318, 320. But if we push under and we hold under 315 tomorrow and then maybe 1450 the next day, we could definitely see that print down to $300. And we could definitely see this continued move to the 200 SMA. We'll see what happens there. My S&P 500 put is just because it's a really good setup, but it's also kind of very, very small, hedging out some of my other positions. So now that we've gone over triple Qs, we've gone over Tesla, I've decided I don't want to take a position in that other than what I have. I've decided in triple Qs that I have a small put position open on SPY, and that with everything else, I really don't care. Maybe I'll hedge that SPY put position with like TQQ or something, I don't know. But now let's take a look at some companies that are having earnings.